Good evening, everyone. Welcome to your drafting and interpreting financial statements revision session. My name's Louise. I'm one of the distance learning tutors here at First Intuition. And tonight we're going to be looking at task 3. So task 3 is a written task. It's not something that students are a fan of. We all know this. So we're going to work through it. It's only small, so I thought I'd expand on it a little bit and think about the different things that might appear in a task 3. So first of all, I thought we'd think about the AAT fundamental principles and ethics, which is not people's favourite part of AAT. Generally, if you've decided to be an accountant, you like numbers, and most people who like numbers don't also like the wordy things. Okay, they are covered heavily at level 3, but they also can come up anywhere along your level 4. So keeping them fresh in your mind, having some revision on them is never a waste of time, because they could just pop up anywhere. And in a written task, not so much in the written task that we're doing this evening, but a written task, if it was a scenario of some kind, being able to refer back to the fundamental principles is the kind of thing that will pick you up marks. So can anyone tell me off the bat, first of all, before I say that, actually, if you've got your books open, close your books. So we're going to see what we can actually remember this evening without just reading things and copying them from the books. Let's see what's there in our minds and what we can remember. And can anyone tell me anything about the fundamental principles? Just off the top of your head, what can you remember? Just about them. You don't need to list them, just some things about them if you was expanding on them. For instance, I'll start you off. So the fundamental principles, they're not rules, right? We know this. They are principles based. Yeah. So what happens if we don't follow the principles? What could be the repercussions if we do not follow those principles? We're thinking about your professional behaviour, your objectivity. Yeah, you could have repercussions that could be penalties from the AAT. You could lose your licence. Are the principles, if you was to go against the principles, would it be illegal? Would you be committing a criminal offence? No. Pretty much the answer is no. However, say if you was to commit fraud, that would probably be a criminal offence as well. But generally, that's not what we're looking at. Okay. So the AAT, you could have disciplinary action, fines, you could be reprimanded, it would go on your record, and you could be expelled from the AAT, which means you might not be able to do your job. Something that's quite interesting to look at is the AAT book, their magazine. Has anybody ever looked at that? Has anybody ever seen the pages where they talk about people who have got into trouble? Yeah. They're quite interesting to look at. And generally, there's lots of times in there where people have not abided by professional competence and due care. Can anyone tell me anything about professional competence and due care as an ethical principle? Don't use your books. Just tell me what you think about it. Yeah, being qualified and experienced enough. Exactly. It's As an accountant, as an AAT licensed accountant, if you continue and you become chartered and you're registered with SEMA, for instance, or ACCA, you have, what's the word? So as an accountant, we get these things in life like more job security and generally higher pay than a lot of people. And these are nice things that come with the job, but there's expectations that come with that. And these expectations are, if a client phones you and asks you to carry out some work for them, that you're only going to do that work if you are experienced and qualified. For instance, if somebody phoned you and asked you to do their tax return, but you hadn't looked at any tax in 10 years, you would not be competent in carrying out that work. You would not be professionally competent. And that's really what the competence, obviously, side is about. And the due care side is more if your boss said to you, I need that profit and loss and balance sheet done by tomorrow morning at 4 o'clock in the afternoon. And you know that that's at least 3 full days worth of work to do. And there's no way that you can do it properly in that time. This would be where your due care would come into play. So this would be where you'd have to tell your boss, I cannot do that work properly in the time that you've given me. And it would go against my fundamental principles. Okay. So what else can we think about? Let's think about objectivity. Can anyone tell me a little bit about objectivity? Being unbiased, I presume you mean there? That's okay. That's okay. Yes, being unbiased, exactly. So we're not letting pressure from others, yet being fair, or not letting financial gain cloud our judgment. So, for instance, if we're asked to change the figures on a balance sheet to show a better result, or we're told we're going to get the sack, that's going to be a threat to our objectivity. Can't speak tonight, sorry, because we don't want to be sacked. And this is the point where we'd have to be strong and be able to say no, as it would go against my ethical principles. Okay, hopefully that makes sense. What about confidentiality? So the general consensus really of confidentiality is we know do not disclose anything unless we have authority to do so. So can anyone expand on that, anything at all? I think like a nice way to look at it is, well, a noise, and not necessarily a noise. Telling one client about another, for example, would be breaching confidentiality. Exactly. Authority should be given in writing. Perfect. Exactly. What about if we had something like a disclosure by error? So say you're working in the office and it's Christmas time and the weather's terrible. It's snowing. You're looking out the window, the roads are getting worse and worse. So you think, do you know what? I think it's best that I just get home and work from home for the rest of the day. And working from home is obviously something that's much more acceptable now than it's been before. So you pack up, put everything you need in your bag, and you lock up the office. And it's only when you're halfway home, so you're halfway down the highway, 20 minutes away from the office, dealing with these really snowy, really slippy roads and just wanting to get home, and you realise that as you was locking the door of the office, you left your bag outside the front of the office. And in your bag is lots of confidential information that you had printed out and put in your bag to take home to work from. So this is a disclosure by error. You didn't do it on purpose. You were just trying to get home. However, you can still get into trouble for that. You would still not be being careful with your client's information, and this would still get you into trouble with the AAT. So it's thinking outside the box a little bit with things like that. Okay, what else have we got? Let's think then here. We've got identify and define the 5 elements in accordance with the IFRS conceptual framework. So let's just do the identify. Can everyone identify the 5 elements? Just identify. And we know the word identify means it's just a word. You don't need an explanation. The explanation will come with the define. Here, I just want to identify the elements. Yep, assets, liabilities, expenses, equity, and income. Well done. Okay. So we'll start with assets. Without pressing enter, can everyone write in your chat box what you think the definition of an asset is, but don't press enter yet because I'll ask you all to do it at the same time. And don't copy it from your book. Just do what you think. If you was in your exam, what would you type? Cool. Try that again. I'll give you all a second to write that down. Okay, go. What's your definition of an asset? Okay. Okay. So first of all, let me just scroll up the chat box a little bit. An asset, yes, it is property that you own. And yeah, the company has capitalized an item. However, that's not what we're looking for here. What we're looking for is the elements in accordance with the conceptual framework. So we're looking for an actual definition here. And it is important that you know this definition because it is very likely to be tested. You're not necessarily going to get asked the definition for each five of them, sorry. However, probably 1 or 2 of them you're going to have to be able to do the definition of. So let's write it down in the best handwriting I can. I promise I'll try. So an asset is a present economic resource. What is that? Sorry. Controlled by the entity. As a result of past events. An economic resource sorry. One day they'll make one of these pens that works really nicely. An economic resource is a right that has the potential to produce economic benefits. This is the definition that we're looking for here. There you go. Sorry, I wasn't looking at the chat then. I was concentrating on getting that down. Yeah. Now, there is some key words here. So what you would need to write, you don't need to write this word for word, but you're literally taking the words out of my mouth. So present economic resource. That's a key. That's something that you would need to put. Okay. Controlled by the entity. Past events. And a right that has the potential to produce economic benefits. There's so much of it that's important that it's probably easier to actually just learn the definition, to be honest with you. But no, you don't have to get it perfectly right. If you got it back to front a little bit, but you included all of this information, you would still pick up the marks, and that would be fine. I would recommend flashcards, something along those lines, to try and learn these. You can't guarantee which ones they're going to ask you. I do see very often that they'll just ask for 2 of them, but it could be any 2 of them. I'm going to need another piece of paper. Okay, so let's try. Yeah, I would highly recommend you revise it because it is something that is tested all of the time. So absolutely. Oh, let's get the pen. Okay, liabilities. Does anyone know the definition for liabilities? You're welcome. I fully am aware that this task is one that students hate in this exam. People can nail the statements after some practice, but this task just kind of gets overlooked, and it is only 8 marks. However, if you've struggled with your statements, being able to pick up 8 marks because you've memorized these definitions could be really useful to you. So does anyone know the definition for liabilities? Yes, good answers. I like it. So this is a present obligation. Ooh. You know what I'm going to do? Hold on. Give me 1 second. Oh, wrong one. Can you all see my blank screen, my blank Word document now? Perfect. We'll use that instead. Hold up. Just a second. Let me get organised. Then you don't have to try and deal with my handwriting. Oh, just a second. Okay, sorry about that. Let's use the piece of paper. Let's put it over here. Right, you can all see my blank piece of paper, yeah? I had a feeling that was going to happen. Oh, how come some of you can and some of you can't? Let's try again. Okay. Can you all see the piece of paper that says liabilities? Perfect. Thank you. Saves you messing around with my handwriting. Perfect. So we had some good answers for liabilities. Let me scroll back up and see what we got. It's a present obligation, the entity to transfer economic benefits as a result of past events. Very good. Resulting in the cash outflow of the business. I like it. Okay, let's jot that down. So a present, it's so much better, isn't it? A present obligation of the entity to transfer an economic resource as a result of past events. So with these, with your assets and your liabilities, if you can remember one, you generally can figure out the other one, because one's a present economic resource and one's a present obligation. If you can remember one side, makes it easier to remember the other side. So for instance, I would recommend, if you're going to go on a mission to learn them, go for assets first and then income. So if you remember assets, hopefully liabilities will come naturally. And then if you can remember your income, your expenses should come a little bit more naturally, hopefully. They are definitely worth revising though. I will keep saying it. Okay, equity. Can anyone tell me the definition for equity? Don't worry about getting it wrong. Just give it a bash. I like that. There you go. Just be honest. No. Perfect, Charlotte. Well done. Yes, Cara. Great answers. The residual interest. In the assets. An entity after deducting all its liabilities. Yes, Sarah. Perfect. And when you think about it, we know that. We know that that's what equity is, right? You know from your financial statements, when you're looking at the equity, we know that that's what it is. But for some reason, when it's a written task and someone says, what's the definition of equity? Your mind just goes blank and you're like, I have no idea. I don't know what it is. But you do know what it is. Just think to your financial statements, how equity is calculated, and you know what it is. I promise you, it's in there. Okay, let's think about income. Can anyone tell me income? Increase in economic benefit during accounting period, revenue and gains. Is either the increase in assets or decrease in liability, which result in the increase of equity. Nearly. Anyone else? Any other ideas? The inflow of resources as a result of past events. Without me telling you what the whole definition is, can anyone tell me what it's not? So the last part of the definition says, other than those relating to. So what isn't included in income? It's okay if not. That's what we're here for. Okay, so our income is increases in assets. Can't spell or anything tonight, apparently. I can't spell, I promise. Increases in assets or decreases in liabilities that result in increases in equity. Other than those, and this is the bit students forget, other than those relating to contributions from holders of equity claims. There you go, you was on the right track, Sarah. So what are contributions from holders of equity claims? What are they? From shareholders, dividends. Well, dividend is money going out, but we're looking at income. I don't think so. You're making me question it now. I'm pretty sure they're the same. There we go. You're getting it now. That's right. Well done. So if that's income, exactly. What's expenses? Yep, decreases in assets or increase in liabilities. Yep. The opposite, the decrease in asset or increase in liabilities, which result in a decrease in equity. Decrease in economic benefits during the period, not including dividends. Yep, you're all on the right track here. That's brilliant. That result in a decrease in equity. Other than those relating to distributions, so it's the opposite now, to holders of equity claims. So someone said it before, but let's ask. What is a distribution to a holder of an equity claim? Dividends, exactly. Because we know in our financial statements that dividends are not expenses, don't we? Is everyone happy with that? Can everyone see how if you can remember assets, you could probably remember liabilities, and if you can remember income, expenses comes a little bit more naturally. If you was to write out income just by looking at it, you can go, oh, well, expenses is the opposite. So rather than trying to learn all 5 straight off the bat, because it can be a little bit overwhelming, just choose 3. Choose either assets and liabilities, either income and expenses, and then now that equity, because equity just seems to throw people. But we know what equity is, we do. Is everyone happy? Yeah, they just have to be practiced, unfortunately. No one loves these tasks. But like I say, you know, if something went wrong with your financial statements, being able to pick up these marks from a few definitions, and plus, as well as that, this is a task which actually you can get through quite quickly. So if you wanted some more time to do like your consolidated statements, if you know these, you can get through them very, very quickly. It's such a small task. It's lovely. Okay, so I wonder now, if I go here, can you all see the question again? No, okay. Technology is not my friend. Okay, so the next question, I will put it in the chat box, was to explain when these elements should be recognised in the financial statements according to the ISB conceptual framework for financial reporting. Let's find it. Is it that one? No, it's that one. Here we go. Explain when these elements should be recognised in the financial statements according to the ISB conceptual framework for financial reporting. This is also something that gets tested a lot and trips students up all the time, all the time. There are 3 things. Meets the definition of an element. Yep. That's one. No, I think you're looking more at you're thinking more about like current value and historical value. Here we're looking about faithful representation. Yeah, here we're looking about what needs to be met so that the element can be recognised, not how it's recognised. Oh, pardon me. So we've got meets definition of an element. Yep. Faithfully represented. Definitely. And does anyone remember the third one? Where's my work thing gone? Provides relevant information. Can you expand a little bit on relevant information for me? There we go. Some really good answers coming in. Just put this over here. Capable to change a decision. Okay. Yeah. That is what's. Yeah, I can do that. So that is really what is the key here. It's changing decisions. It's can the information that's provided help the person, whoever the reader of the financial statements is, make a decision. Does anyone know anything about materiality? Yes, I love that. I love that description. Well done. So materiality is exactly what you've just said there. So for instance, if Tesco's have prepared their financial statements and they realise that they have missed off £1,000 worth of purchases, do they need to add that £1,000 back on? Is that £1,000 of purchases going to make a difference to the financial statement, so much so that the users of the financial statements might make a different decision? Is it going to change their mind? Probably not. Can you imagine the purchases line on Tesco's financial statements? Can you? Yeah, I don't want to do their books. No, it's not going to make a difference, is it? The person, the readers, the users, it's not going to affect them. However, a little corner shop down the road where we get our bread and milk from early in the morning when we've forgotten it, or the kids pack lunch stuff. If they miss £1,000 worth of purchases off their books, is that going to make a decision? Yeah, exactly. It's going to affect the decision that's made by the users, because it's going to dramatically affect the bottom line, the profit or the loss. An extra £1,000 for a small business where the turnover is not that big is huge. So it's a material item that needs to go on the financial statements. Whereas for Tesco's, it's not material because it will not affect the decision makers. Well done. Okay, and I'll keep stopping and starting sharing. That's fine. And start share. Okay, last bit of the task then. So current value is one measurement basis for the elements. Which of the following is not an acceptable way to obtain a current value? What do we think? Everyone give me an answer. Some answers coming in. Okay, Zara, if you don't understand, have you... Sorry, I was giggling at Ash. I'm sorry. Zara, have you got the link to all of our revision sessions? Have you seen the previous ones? They might help you a lot. Just cool. Have you got the link for them, or have you just seen the ones that are on YouTube? Okay, hold on just a second and I will get that link for you. I have it saved. So on this sheet, across the bottom, there's all different tabs, and that's for each unit. So we obviously don't have many for this particular 2022 unit. However, if you just go to the financial statements unit, all of the revision sessions on there are going to be completely relevant to this revision session. Well, to this unit, apologies. You can tell it's late at night tonight, can't you? Got things in my way. Just trying to find something here that I've been asked for. So you asked if I could explain it further, and you've noticed that similar questions expect you to use more than one basis, and I'm not sure why more than one bit would be applicable. Do you know, could you point me in the direction of one of those questions? Just so I can understand and see exactly what you mean. If not, you can send it to me after, and I'll be happy to come back to you. Okay, so let's think we have our current value. Let's get our piece of paper back again, shall we? I think that's it. Okay. Our current value. So under the method of measurement as a current value, values are updated to reflect the conditions at the reporting date. So that makes sense. It's the current value. It's at the reporting date. There's 3 ways to obtain a current value. So we have our fair value. And this is the price that would be received to sell an asset. Or to settle a liability. The key to this definition, though, is in an ordinary arm's length transaction. So what this means is it's a normal day-to-day transaction. It's not, you know, discounted in any way. You're not selling it to your best friend, just the fair price. Because you could say, well, I've got this machine and my mate down the road says he'll give me 20 grand for it. But actually, if you was just to sell it in general, if you was, you know, to sell it wherever people go to sell machines, you might only get 3 grand for it. So that's why this in an ordinary arm's length transaction is a key part to this definition. Okay. Next, we have our value in use. And our value in use is for assets, our fulfillment value, and for liabilities. Okay, so value in use is the present value of all the cash flows we expect to derive from an asset. Does everyone understand what that means? Is everyone happy with that bit so far? Yeah. Okay, good. So fulfillment value is the present value of cash flows we expect to transfer to settle a liability. Okay. We then next have our current cost. So our current cost, this one makes sense, I would imagine. It's going to be the cost of an equivalent item. So if your machine breaks and you need to go and buy another one today, this is how much it would cost you. It's your current cost. Okay. So you have your current value, which is how much you would receive if you could sell it. And your current cost is how much it would cost you to replace the item, to buy a new one. Okay. So this is the cost of an equivalent item if you had to replace the asset or settle the liability today. Okay. And that helps us answer our previous question, which lots of you did get correct. The full value is not one. We're looking at our current value, fair value, value in use, current cost. Okay. Now, I'm going to repeat myself, but these definitions here, your liability, your assets, equity, income, expenses, they are almost certainly going to appear one way or another in your exam. They are. So no matter how much you don't want to learn them, I highly recommend that you do. It'll just be worth the effort just to pick up those easy marks. If you can name these, oh, don't worry, Ash. But if you know these definitions and you don't really have to think about it, this question will take you 2 minutes. Like, there was nothing in here, there was no real extended writing, even though it is a written task. The definitions themselves are not that big, and there's nothing in there that would take you a long time. You might be able to do this task in 5 minutes, which gives you a little bit extra time to do those statements that you might find you need a little bit more time for, or your ratio is at the end. Okay. So is everyone going to learn them? And does everyone understand them? Brilliant. Yes, Charlotte. However, there is a slight difference on the 2016 syllabus. There is a lot more about the fundamental principles. I think personally that the task is bigger on the 2016 syllabus, and it's actually much smaller on the 2022. Overall, the exams aren't, like, you know, there isn't really a difference in difficulty. It's just task 3 on the 2016 syllabus definitely has more questions regarding your fundamental principles, which are important to learn, which is why I discussed them a little bit at the beginning, because they can just pop up anywhere. Okay. Also, Charlotte, that link that I posted earlier, that's got all of our previous financial statements revision sessions on, if you would like to use them. And honestly, obviously you've just said you knew you should have transferred to Quals 22. In the grand scheme of the exam, between financial statements of limited companies and why can I never say it, and this, you're drafting and interpreting financial statements, there isn't a big difference. They are very, very similar. It just is the way that they've done the tasks means that task 3 is a little bit smaller, that your fundamental principles might come up somewhere else in a different task. It doesn't mean that it's easier in any way, shape or form on 2022. They've just moved things around across the tasks a little bit. Okay. It's something actually that we notice quite quickly as tutors. I will be teaching the financial statements next year. And when I first looked at it, I looked through the notes and was like, this is literally just the same as as the old one. That's great. Because obviously some of the new units, like I taught in AC, and that's completely new. So that took a lot. I had to obviously learn it myself before I could deliver it. Whereas financial statements, you look through the book and it's so similar. Okay. So I'll let you all go. It's 5 to 8. I've managed to drag a really small question out for quite a long time. Thank you for bearing with me whilst we switched over to the Word document rather than my terrible handwriting. It was lovely to speak to you all. And anybody who's got their exam this week, I wish you the best of luck in the world. Keep calm. Remember, if your statements don't balance, it's not the end of the world. Do not waste loads of time trying to balance them, because it might just be that you've got one little thing wrong. If you have done your whole statement and you've got something wrong near the top, but everything underneath is correct, you will only lose that 1 mark. So do not waste all of your time trying to make it balance, because, you know, your statements could balance, they could still be wrong. So just once you're certain in your heart that you've done the best you can with your statement, move on. Don't waste your time. Okay. And definitely revise these and your ratios. Okay.